Hello, this is Dean Malone with Comps of X. I hope you're doing well today and you get some good trades. In a previous video, I talked about trading the Traders Dynamic Index and looking to enter the market off extreme highs and lows based upon the Traders Dynamic Index. You know, I've had an overwhelming response from that video because I made the claim that trading doesn't have to be that difficult. You can really simplify your trading by looking for the market to reach extreme levels or to push itself out. Like a rubber band being stretched, it's going to snap back to a center point or to a mean. And that's what we're looking for in the Traders Dynamic Index. And when you have price action and the Traders Dynamic Index in alignment, you have a better probable trade. So today I want to answer a few questions that I got related to trading highs and lows of the Traders Dynamic Index and show you some trade scenarios that took place based upon just looking for price action, Traders Dynamic Index at extreme levels, and we can also match this up to find potential targets where the market could go after it's gone to an extreme level. I've had some questions write in and say, Dean, I understand that if we're in an extreme level, like here you see the market baseline, the Traders Dynamic Index is pushed way below the 32, and that's what we were looking at. When the yellow line gets below the 32 or above the 68, we're looking for a retracement back to center. Okay? And oftentimes I found that when it goes well beyond the low or the high levels, that sometimes it's like someone driving down a road and they are not minding the road and they find themselves over in a ditch and they yank the steering wheel back to center. Oftentimes they overshoot the center and they find themselves in the oncoming traffic lane, and then they swerve back to center. And that sometimes happens in the marketplace. We go from one extreme, the market pushes up to a fairly high point, and this is the current market conditions pushing back, and then it starts to settle back. So as this comes over, now we'll get the settling back to center. And then when everything's back to center, then we look for another setup as far as to where the market's going to go. We're not so much concerned about what's going on here as to what's going on here. Because we know that if the rubber band has been stretched and the market's gone to an extreme right down here, it's going to go back. It's just where to and when will it? Well, you know, there's no crystal ball here in trading, but we can use certain things in the marketplace to determine where it's going to go back. One of those things that you can do is when you see this setup, wait for the green line to break back above the 32 or break outside, like in this case broke above the blue volatility band, and the green is over the red and over the yellow and everything's starting to turn. Sometimes it gets a little up and down going on here, but see here the blue average price bar is rising above the price action channel, the two yellow lines here, and this is in sync with what we have going on right down below. It's just almost in sync with one another. See, the green line's rising here, the red line's rising, this is happening, and this is coming off an extreme low point and heading back up. That's what we look for. Keep it real clean and simple here. We've allowed it go down, do its thing. See, back here, people are saying, well, what about entering right here? Well, it's not yet above the 32. The green line's not. It's still down below, and it still tried to push up, try to get some more shorts going, and then it couldn't go any lower, then now it starts turning. Well, where to? Well, then you can use possibly like a fib. One thing that I'll do is just go from extreme low to extreme high and look for that retracement. Your typical standard retracement is to the 38.2. Now look at this though. The market went up to the 23.6. And one of the key things I tell folks is if you get a retracement to 23.6 and that's it, that's all you get, look for continuation of the trend down. However, look at this massive move down that the pound took. It's a pretty sizable move, way beyond its average trading range. So it couldn't go any lower, couldn't fall back over here, so guess what it does? It pushes on up to that 38.2. We haven't gotten back down to 23.6 yet, so I don't know if we're done with the retracement yet. We may do one more test, but if the market breaks 23.6, I would think that we would fall back down. Now, another thing that I've suggested to folks to use in their trading is to look at the average daily range, because if you can identify the average daily range and then mark what those ranges are based upon the week, you can identify targets as well. And what I've designed and developed a few years back with Compass FX is the average daily range pro calculator, and this does it for you automatically. It literally lays levels out that stay the same for the entire week. And you can see here that when the pound came down, it came through the weekly mid-low level, then it came down to the weekly low, tried to push lower, couldn't make it any lower, came back up. Now watch this. Take a look at when it starts making that push up. You can see right here it starts making that push up, gets above the weekly low average daily range, comes back and tests it. It holds right there, and we're going up. Well, where are we going up to? Well, the average daily range calculator is solely based on price. If we watch price cycles in the marketplace, oftentimes price will go back to where it's been before, and look what the market does. Right back up to the weekly mid-low, hangs out right about there, which happens to be the 38.2% of that whole move that we saw in the pound. Now, this wasn't the only trade scenario that we had off of trading off the extreme. We also had the yen. Look what happened to the yen. The yen came down to an extreme down here and it started working its way up. Now look here too. See it kind of come up a little bit, but then it dropped back down. Look when it started actually making its move. I'll put a little line right here, and you can see here again, green line rising above the red, above the yellow, green's breaking out of the blue volatility band right here, coming up right here, boom, another move, and we are bouncing off the weekly extreme low number 1 level. Haven't yet made it back to the 93.23 level, but let's just take a look what it did do based upon our fibs here. See what type of percent it moved back to. Look at that. It moved right back to the standard profit taking level of 38.2. And so what we'd be looking for is, does it come back down, break 23.6 and make another move down? Or do we hold and work our way back up to the weekly low? One last observation I've made is to take a look at the Aussie dollar. Now then, we can see what the Aussie dollar has done on the 15-minute chart. You can see the extreme high here. It rolls over. Now look at this. See how that broke down right here? But it wasn't completely ready yet. And it retested the breakdown through a large pin down, came back, tested the weekly extension high number 1. Then finally we get the roll back down, and then we actually get the move. Look here too. Nice bar down. We see the green breaking outside here. We see everything in alignment coming off of a high. Now in this case the market did push down back to the weekly high of our average daily range calculator, and then it's pushed below that. And it looks like we could see some more movement down possibly here. I think right in this level of 104.50 is a key psychological level in the Aussie dollar that we'll have to break. And if it breaks that, then we already have a target in mind, the weekly mid-high, which is at 434. If we break that, then we go back to the weekly open, which is right around the 104 level. If we break that, then we push on down to the 380 level. But look down below here. Look right down here. Look what we have right there. Notice that the market baseline's coming down again. It's getting into that low level. We have another potential setup like we had back over on the pound. See back over here? Or on the yen. See back over here? So we have that possible setup occurring on the Aussie dollar. So if the Aussie dollar just kind of sits here and can't seem to break 450 or stays above the 434 level and tries to make another attempt back at 105, look for a possible bounce. If this yellow market baseline gets below the 32, look for the bounce and the push back up. Now I've had some people write in and say, hey Dean, where do you get this TDI? Where do you get some of this other information that you're sharing with us? How can I get the Trader's Dynamic Index? Well, I'll tell you what. If you go over to the Compass FX website, www.compassfx.com, if you'll scroll down, you'll find some icons down below. Now, you can go to the basic synergy model, and in the basic synergy model, you can simply register for a free Traders Dynamic Index. Not only do you get the Traders Dynamic Index, you will also get this is the Traders Dynamic Index. You will also get the average price bars, and you get a couple of templates that talk about where to enter and where to exit the market based upon the synergy trade model that I developed. Now, for those of y'all interested in the average daily range calculator, there's an icon for that. I've also developed the Traders Dynamic Index for TradeStation, for those of y'all who might be using TradeStation. And if you want to learn more information or see more videos about the Traders Dynamic Index and how to trade with it, I do recommend you check out the Forex videos. I have a library of over 400 free videos, a complete knowledge base available to you 24 hours a day, 7 days a week. Just simply go to the Forex videos, go through the table of contents. There's a number of videos done about the Traders Dynamic Index, about the synergy model, and about other things about trading the markets, whether it be divergence or Fibonacci levels or pivots or other ways of trading the marketplace. Well, folks, this is Dean Malone with Compass FX. Again, I just wanted to share with you about, look at this. Look at the clean trade that we had simply because the market was at an extreme. And when you find the extremes in the Traders Dynamic Index, you wait for your setup and you follow through. Keep your trading simple by trading off the extremes. Well, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.